Hi traders, welcome back to the Desire to Trade channel. So we hear this one all the time. Just do what's most comfortable for you. If you like this strategy, well, choose the one that's most comfortable for you. Where do I put my stop? Whatever you're comfortable with. It sounds all pretty good, but is there a price or a cost you're paying for this comfort? Let's take a look. Okay, so one of the things I find very consistent with developing traders, even the ones that are executing their plan properly, is they love to see this element of comfort or confirmation in your trading strategy or price action before they enter. It just kind of makes sense. But is it the optimal place for entry? Or is it just something you're comfortable with? So let's go a little deeper into scratching the surface here. What are we trying to accomplish with this? Well, is there a price to pay for sort of my comfort when I get into a trade? And ultimately, it really comes down to profit factor. Am I sacrificing profits or profit factor ratios into the fact that I want to be comfortable in my entry? I have found in the past, and I made the transition years ago, that I've set up more aggressive entries and my profit factor increased. Now, that may not be the case for everyone. What's the ultimate goal here? Well, the tease is, we have to do a back test to determine where you're entering now and could you get in a little earlier with or maybe redefining what confirmation is as opposed to confirmation, and then see, are the results different? Ultimately, it comes down to a back test. So the goal here is to really assess, what's the price am I paying for comfort? In addition, what I found out is not just the differential in profit factor on a trade or on a strategy. Well, when you think about it, if I'm getting more profit factor, my scaling plan in my overall trading journey is going to be sped up more. So I'm going to be increasing to, say, 2 contracts or 3 contracts on my futures trades quicker because my profit factor is allowing me to do that. When I look back over a series of a month or two, not a big deal. But when I look about it over a trading career, it was the biggest mistake I was making. And once I made that transition to be a little more uncomfortable in my entries, granted, lower win rate, but I was able to put my stop lower and be able to have a higher profit factor. Let's look at the example here. For example, a very high level example. Here would be a typical entry based on a moving average cross, maybe with a pullback. It's all fine. For me, it has a positive profit factor, so I'm not that concerned. But when I adjusted it to determine, say, maybe I could be more aggressive rather than wait for confirmation bars and just enter, in this case, at the 30 moving average, my profit factor went up on one of my strategies from 1.30 to 1.47. Doesn't sound like a lot, but it really plays out big in the long run. Let's look at another example. Here, your typical classic, and I'm keeping this simple, breakout trader, all right? Breakout trading strategy. It works 100% of the time when it works, right? But look at the difference between the trend change and the breakout. Now, I'm not saying you're going to be able to pick bottoms. Hindsight's 2020. But at some point within this sort of confirmation range, maybe there was a better entry. I don't know. That's the goal of this video, for you to do the back test and say, I waited for this to change. I waited for bars. I waited to get to this level, and it goes all the way up. And now I'm going to buy it at the breakout. All right. Again, if you have a positive profit factor, that's fine. But maybe there was an opportunity to get in earlier with, quote, redefining your confirmation that allows you to get in on it. Me personally, I want to be selling my first target to the breakout trader. So I'm going to be a little more aggressive and enter sort of somewhere in the mid-range. And you could have other triggers that will set that up. Maybe it's a Heikin-Ashi trend change, or maybe it's the early stages of a shorter time frame cross or something. Whatever the case may be, do your due diligence and do your back test to see, is there a better opportunity? I personally love to discard my positions or get rid of some of them for the breakout trader. That's sort of how I made my bread and butter living. All right. Next, another tip. Everything's working out. You have your trigger, you have your price, your pullback, whatever it is you're doing. But maybe there's a filter you can add to say, you know what? Yeah, everything's lined up, but price has just gone too far in my favor and I'm not in on it. I'm going to eliminate or not qualify this as a compliant trade. Maybe there's another factor. I'm going to wait for a bigger pullback or a fib pullback to the 50 or something. But there has to be some type of filter that says, hey, you know what? Everything's working out, but this is just too far away from the trend change. And I've just really didn't participate in most of the move. Another cool thing that I like about being more aggressive in my entry is my stop placement. I'm not just placing it at a certain dollar figure or a certain points or a break of a bar. That's kind of like sitting duck for me. I want to be in a spot where I know I'm wrong. And if I get in a little bit earlier, I could place my stop somewhere below the lows of the move. Now I know I'm wrong, or at least in theory, I know I'm wrong, rather than just be a sitting duck and say, for a breakout trader, it pops up, I'm in, and then as soon as it goes back into that range, now I'm in trouble. Well, maybe you're not in trouble, but you have a lot of room there where price can go, which is reasonable, and then you get stopped out, and sometimes it goes in your favor. So I love being more aggressive, albeit with a much lower win rate, which doesn't bother me because my profit factor could be higher. Again, something to consider. Okay, and one last thing about win-loss. Now, if anyone watched me on the channel or part of our member community, I'm not a big win-loss guy. In fact, I stopped measuring those last year, and I have no problem with it. Profit factor to me is what pays the rent. It pays the bills, not win-loss. So when you do these exercises in your back testing, look at your journal. Look at your actual results. You don't have to go back testing sort of raw data. Look at your trades and say, okay, where was my entry where it was? And could I have gotten in at a better place, more aggressive? Granted, win-loss would suffer, but was my profit factor different? That can have tremendous impacts, even though they're small, can have tremendous impacts on your growth as a trader. So one of the things I like to do is not eliminate confirmation, right? Is just to redefine confirmation. So say you have an example where price pulls up and just say we want a retracement back to the 50% Fibonacci or, half back move in a retracement. That's my entry. Well, I'll put my entry right there. That is the confirmation. The fact that price came there and I'm expecting buyers, at least historically have shown me, buyers will come and, step back in. All right. If it doesn't, I know where I'm wrong. All right. So it's not a question of eliminating confirmation. I'm just not going to go through that whole reversal bar, confirm, wait for the break of that. It's just, to me, I'm leaving too much on the table. And it's not just me. My profit factor is telling me that. All right. Another example of confirmation, for me at least, is when price starts to settle down. So say you have a pop and a retracement. Well, just the fact that it's not continuing to go down, to me, is a trigger to say, now may be an opportunity to get in. Maybe it's just the sellers exhausted themselves. Buyers are maybe taking over, but they haven't taken over yet. The bottom line is the move isn't continuing against me before I get in. That's good enough for me. That's confirmation. Now I got a nice sweet spot entry. If it doesn't work, I'm fine. That's why you have stop placement, and it's closer to where I would be if I'm waiting for that confirmation bar and another bar and the break of that bar. To me, it's just too much profit factor sitting on the table. In some advanced analytics that I use, I'll actually use the tape. So I'll tape read to see, is the buying slowing down? Are there sort of newbies coming in starting to sell? That's a big trigger. That's confirmation in itself. Just because price isn't bouncing, when I see those newer one contract traders on the future side starting to pile in, that's usually my signal to say this sort of pullback is over. All right. Also, I'm looking for the initial stages of maybe some big block trades on the buy side, even though price hasn't really responded yet. That is confirmation. So redefining confirmation is really the key to this whole game. One of my points here, and I'm going to get a little philosophical if it's okay with you. In anything success that you've achieved in life, when was it always comfortable? Right? You got that promotion, you're all excited. Then the first week on the job, you're like, oh my God, I don't know what I'm doing. Right? Maybe your boss comes and say, hey, your coworker's out today. You're going to be doing the meeting at 10 and you don't even have the slides, but you somehow managed to get through it. How about that first date, right? Some of them always work out. Maybe they become your future partner. But you know what? That first, you're always nervous, right? So really, a lot of things in life isn't all about being comfortable. It's about taking sort of that leap of faith. And in our case, using math to really be your comfort as opposed to looking at visual things that show reversal. So I hope you got something out of this video. Interesting topic, I think, and certainly up for debate. What are the next steps? What are some of the practical things you can do, starting your next trading day? One, quantify confirmation versus confirmation. Play around with your entries. What are some of the triggers that may have happened before yours that led to say, let me try this, and do a simple back test on trades you've already taken in your journal. You don't have to just do a raw back test and say, maybe there's a little more meat off the bone that I can get. Look at your charts too. Look at the distance from the swing low to where you entered if you're going long. Are some of those look a little excessive? Are some of those really, wow, if I had a chunk of those, I'd be doing really well? That may be the trigger to say, let me take a look at some of my trades and see, is there an alternative entry solution? And lastly, understand that trader growth is the comfort. When you're doing really well and your profit factor is steady and high, there's your comfort, knowing that you're achieving your goals. And if you keep doing what you're doing, you'll go well beyond what you wanted to achieve. It's not necessarily waiting for a bar. It's about getting more meat off the bone or potentially getting more meat off the bone. That will give you confidence. And you have that nice smooth equity curve. You don't need to worry about a confirmation bar. I hope you enjoyed this topic. Let me know your comments. Let me know if you did a back test like this and it didn't work out, or maybe comfort seems to be overtaking your profit factor results. All right. Let me know in the comments below. Let's have a little conversation about it. And most importantly, subscribe to the channel. I realize that 49% of everyone who watches the videos that I've produced on the Desire to Trade channel on a regular basis aren't subscribed to the channel. It'll help the channel out. It'll let Etienne know that he still wants me around for a little bit more, and it'll help the whole channel in producing great content like you see here today. Thanks again, and we'll talk to you soon.